Hello traders and welcome to another video review. Today is Friday, August 2nd, 2024, the first Friday of the month of August, so you know what it means. Let's find out what's going on the economic calendar for today. Australian data overnight were basically better than expected. If PPI was in line with the expectations, the monthly PPI was better than expected, and home loans beats the expectations. CPI in Switzerland were in line with the expectations of minus 0.2%, so the consumer price index is slowing down in Switzerland, but the PMI, we are still waiting for the PMI from the Switzerland. Bank of England MPC member Peer will give a speech at 1:15. Then we have some kind of a data that everyone is looking for. First Friday of the month, NFP payrolls. NFP payrolls, average hourly earnings and unemployment rate. All of this data are scheduled for release at 2:30. The market participants expect a drip to the downside from 206,000 to 176,000 jobs. Unemployment rate should stay at the same level of 4.1%. Together with the Nonfarm payrolls, we have another data scheduled for release. At 4 o'clock we got the factory orders. At 7 o'clock we got the US bucket Hughes oil rig count and total rig count. So today everything is all about the NFP payrolls and the labor data from the US. So let's find out what's going on the euro dollar, and we are going to the technical part right now. Euro dollar has tested the level that we mentioned last time, 1.0789, and the local low was made at the level of 1.0778, which is just like 4 pips away from the 61% of the retracement of the last wave up. So pretty solid movement to the downside. We can get rid of this Fibonacci right now because right now we almost hit the 61%. So please remember, any breakout down today 4 pips lower would mean that the the 61% retracement has been hit to the pip. Now, what can we expect after the today's of course price action with the NFP? First off, increased volatility. So please stay calm, stay focused, because today's NFP might be very, very violent. So let's just switch this to the technical support. This is the resistance that can be still labeled as the support. Any movement 4 pips lower than this low means 61% is fully retraced. Now, big spikes from the upside on the 4-hour chart. This means that the market is under the bearish control. Best control the market. They are pushing the prices lower. So if the NFP pairs are not in favor of the market participants, we can see breakout to the downside and test of 1.0713, and that's almost 65 pips drop to the downside. Momentum remains negative, momentum remains weak, only 41 points. So the bears are in charge of the market. As long as we trade below the trend line, below the moving averages, we should see lower levels on euro dollar. So if we see lower levels on euro dollar, what the gold is doing? The gold is rallying. The gold is rallying to the upside. So our ABC corrective pattern ahead of the FOMC interest rate decision was invalidated, and this time we can see very, very nice rally to the upside. So 5-wave impulsive pattern has been completed. Now the breakout to the upside has been seen, targeting the level of 2,467. That's the local high, and 2,483 is the next one. So we are very, very close to the swing high, and we might test it anytime soon. If we apply this situation here, this situation, the channel, we can see the breakout of the channel. Very, very nice breakout out of the base channel. The upper channel line is now together with the level of, this is 2,451, working as the technical support, and this level 2,451 is working as a technical support. So bulls and chart of the market, but we hit the extremely overbought market conditions. So please prepare for the test of this level, the swing high, and then we see what the market will do. As you can see, 5-wave impulsive decline to the downside might not be that well. It looks like if we break above 2483, then of course our initial impulsive wave labeling will be invalidated, and in that situation, let me just propose alternate labeling, which is of course the zigzag labeling, which is corrective. So we got the wave 1, 2, 3, 4, and 5. This is the small cycle. Wave B to the upside, 1, 2, 3, a little bit 4, and 5 to the downside. So extended wave A, short wave B, and a regular wave C in this zigzag. It can be easily misinterpreted as the impulsive cycle, but this situation here, that cycle is valid only if we break above the 2483, eventually marking a new swing high on gold. Please don't forget. Now we got the gold, we got the euro dollar. Let's find out what the SP 500 is doing. Big sell off yesterday. We retraced 61% to the pip of the last swing to the downside. So A, B, C to the downside done. This looks like kind of a B and C-ish again. So what do we have here on the S&P 500 is another corrective wave. So from the lows here, we can see this situation here, that cycle here, and this wave C to the upside into the 61% of the Fibonacci retracement. Big bearish engulfing. Let me just zoom in. Big bearish engulfing and sell off way lower. So that means we are still doing the corrective cycle. So right now we got the W. Let me just mark some text. So this level here is. Can I have just some text, please? Yes, it can be 16, and the text would be W. So we got the W, and now we will copy it because the upper wave looks like X. So let me just make it here. There you go. We are waiting for the Y. We are waiting for the wave labeled as the Y, and this wave should end below 5,393, which is the wave W low. So that's the outlook for the S&P 500. And last but not least, we've talked about the gold, S&P 500, euro, dollar, Bitcoin. What is Bitcoin doing? It looks like the bulls defended the technical support of 63,258 after the initial breakout, because we got very big bullish engulfing pattern. Fine. However, let me just mark the low, 62,236. That's just the low. But this situation here that happened with the test of the 100 periods moving average, this pin bar here doesn't actually look good. Doesn't actually look good because it means that the bears are making pressure on the market, even despite the fact that there is bounce from the extremely oversold conditions. We need to break above the level of 50. We need to break above 150 periods moving average to rally higher towards 60 to 8,520. If there is another failure here where the moving averages are, then of course we can see new lows on the Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.